Hello everyone and welcome back to another market review. This is Silent. Today we are looking at the NASDAQ December contract for 2025. We are starting off with the weekly chart. If you remember from our previous video, we were watching for an attempt to deliver through the 0.5 of that wick again, and we failed to see that. So we started treating the previous week's weekly wick as a premium array, and it started reacting bearishly off of these quadrant levels. And after we crossed over the new week opening gap that we've put in on this candle's open, we traded heavily lower. So we got a redelivery into this large gap from last week, and going into tomorrow we're going to be seeing if this heaviness can continue and deliver more of this imbalanced range. If not, we could expect a consolidation to form in between these two ranges where there is no trading that was delivered at all. So this is a liquidity void, and there's nothing wrong with seeing a consolidation inside of that range either to fill in some numbers. Dropping into the daily chart, I've brought down that weekly wick constant encroachment. We were mentioning yesterday that we could potentially fall into a consolidation if there was no extrapolated move in either direction. We ended up rejecting and going lower on lower time frames, and after we opened the day at 6 o'clock, it just stayed heavy all night and delivered over top of the high of that daily fair value gap and extended its way through all of the quadrant levels that I've marked inside of this gap. We stayed above the lower quadrant of this range, but closed below the midpoint. That's kind of what's telling me to stay bearish and any retracements to fade them. So going into tomorrow, I'm going to stick with a heavier bearish bias and just expect a delivery down into this range, color outside of the lines of the fair value gap a little bit, and then trade higher. So if anything, we can open lower here, trade lower, color outside the range with the wick, and then come back on top of the weekly open and paint a up close candle about 3/4 of the range to the upside here. On the 4-hour time frame, we can see that price rolled out through the 4-hour buy side imbalance here on the open. I mentioned that we were waiting for a displacement in either direction to get us outside of that buy side imbalance range, because staying inside there promoted consolidation. As we displaced through this range, we got a closure below these rejection blocks and an overlapping of the high of that daily fair value gap. So the very next open, as we colored outside of the high of that range, all of this is premium here, and coloring back over this same candle's open promoted this extrapolation to the downside because it needed to create a sell side imbalance over top of this buy side imbalance if we were truly going to move lower today. So we produced that imbalance to the downside. Price trades back up into it. There's no need to deliver inside of this range because we've already marked in a balanced price range here. Price comes back up and tests the lower half of that 4-hour buy side imbalance and the upper half of this sell side imbalance here. And this very next open, we trade up and it drops heavily, getting a run under the intermediate low here and almost completely filling that large new week opening gap. So very nice delivery today. If anything, I'm going to expect consolidation, a small retracement, and then a return to the downside. In my opinion, if we're going to reverse here, it's going to take a little bit of time and trade up and down through this range in order to send it higher. So the easiest and most obvious expectation would just be stick bearish and try and get a run outside of the low of that fair value gap. Otherwise, let the consolidation happen and build in a reversal for Thursday to the upside. Any upside movement past these candle highs here would get me in favor of going back and being bullish for a run on a new all-time high. On the hourly chart, we can see that delivery is strongly lower all throughout the Asia session. We open at midnight here and give us a displacement through. We trade lower and hit the new week opening gap and consolidate a bit, and then going into New York open, we retrace into that 4-hour buy side imbalance and this 1-hour redelivered rebalance. So we're retesting this range and keeping this range highlighted for today because price has respected it multiple times throughout the week. So returning into it after delivering lower with a displacement should be treated as a premium array. We can take sales inside of this area and expect price to cascade lower, and it does that. After we shift under this low, we leave an indecisive candle and it bakes in a premium after running this candle's high and re-delivering into this sell side imbalance. So it retests that once and has a strong sell-off going into the end of the day to almost completely fill that new week opening gap. On the 15-minute time frame, you can see how clear that bearish bias was because of our Asia range boxes. Last Friday's Asia range is higher than today's Asia range. So cutting out all of Monday and not counting Monday's Asia range, we're utilizing Tuesday price closing and staying below the last Friday Asia range is a bearish signal to me. We are identifying that this day should trade lower because the previous day's Asia range is higher. So we trade up, retest this Friday sell sign imbalance on the last few minutes of the day and close lower with a wick. We gap down on the new day and price stays heavy, shifting under all of these lows. So immediately going into Asia, you're bearish, and so you can treat the new week opening gap as a premium array after we traded under it. So as we begin slicing through this level, price closes at the low. So any of this retracement up and consolidation here should be a selling opportunity, as well as this sell sign balance overlapping that range. We are reversing the role of the new week opening gap being bullish because it's already attempted to rally from this range twice. So cutting down through it and retesting should be treated as a premium array. We get that confirmation after another shift lower here. And all of this is being done during the Asia session. So the entire bias is baked in during this time, and it's off to the races as soon as we cross over the midnight open. A lot of the daily range is already produced going into London. So that's what creates this consolidation going to the end of London and the open of the New York session and its pre-market. We utilize this fair value gap and this down close candle as a bullish order block and bullish fair value gap. We rally from it just to create a retracement on the higher time frame, revisiting the first imbalance of the day, and price sells off heavily, overlapping this buy side imbalance. Retesting it here with this indecisive candle is your entry for the bearish inversion fair value gap. Price stays heavy under that range and retests it once more, and then sells off heavily going into the end of the day. Every imbalance that's created on its way lower is respected as a premium array. And I want you to take special note of this fair value gap because it's overlapping the constant encroachment of this old new week opening gap. So I'll be watching this going into tomorrow. On the 5-minute time frame, you can see that daily profile play out a little bit better. We have the last part of the Asia session, and price drops heavily during the open of midnight and leaves this imbalance here, and then goes lower and falls into a consolidation pattern without breaking lower initially on the open. It's signaling to us that a retracement is due, especially after shifting above this high. Price comes back and spends a lot of time inside that higher time frame sell sign imbalance and wicks up into the first 5-minute fair value gap of the day a few times. We create an imbalance on the way lower, so a shift under this low and leaving imbalance is already signaling to you that this buy side imbalance here should reverse its role and become inversion. So the very next sell side imbalance that's traded into should be respected and treated as a strong premium array because there's a overlapping effect of two imbalances here. So in essence, this is a balanced price range, and that is why price stays so heavy under it. We come back to retest this rejection block once and it's lights out for the NASDAQ, and we sell heavily under the initial low of the day, and it continues a high resistance grinding sell side delivery to the downside as we work into that old new week opening gap. All I've done on the 1-minute time frame is extend our first presentation fair value gap for the morning session and the afternoon, and we can see how price utilizes it as a breakaway level. After testing it here inside this wick, we launch from it and spend a lot of time creating this accumulation of shorts. We finally shift lower, and every imbalance that's left is a selling opportunity. Every retracement comes back into imbalance and is sold off heavily, and then it's go time after we cross through the first presentation fair value gap. After we cross under this range and come back up to test it, we want to have a bearish expectation. So we're selling every retracement into this range and expecting a run lower into that large new week opening gap. So price sells off going into the afternoon, and after we cross over and create our afternoon fair value gap, we do a similar kind of price pattern that has happened in the morning, just here, and it shifts lower, consolidates, sells off heavily, treats it as a retracement opportunity into this imbalance, and then crashes under it and fulfills all that sell side liquidity here. We consolidate and retrace into that same level. We drop and then do the same thing. Then going into the market on close, we have a strong sell-off covering over 3/4 of the new week opening gap. There was a lot of opportunity today, so hopefully you got a piece of that. And don't keep your expectations too high for tomorrow. Just stick with short-term scalping. If a strong expansion develops that allows you to be a participant in, keep a runner and just see how far we'll go. Just be very nimble going into tomorrow because we're near some very key levels. So if there's not a strong reversal off of them, then there's going to be a lot of manipulation to the downside. So be very careful tomorrow. Alright guys, so that's going to be it for me today. Hopefully you learned something. If you found anything insightful, please let me know in the comments. And as always, like and subscribe. I will see you all tomorrow.